risk of global stagflation is making investors nervous. MSCI Emerging Market Index and MSCI World Index have declined 20% in the year 2022. Hi, I am Saurav Kumar and I am joined here by Bhardwaj. He writes for ET Wealth. And in this video, we are going to discuss stocks that have shown strong resistance to market downturns and correction. Thanks, Samir, for joining us. So, Samir, what's increasing the stock market volatility?
Okay, so sort of as you've already mentioned about the global risks of global stagflation. So, stagflation is basically the economic phenomena where the higher inflation is accompanied by the low economic growth.
Okay.
So, this is one of the points that is making investors nervous. The other thing is that the first quarter earnings are coming up, and if you look at the preview reports from Kotak Securities and Phillip Capital, so there will be a quarter-on-quarter decline in the net profit growth.
Okay.
So the reasons basically for these decline is the ongoing supply disruptions, basically high power fuel costs and decline in the volumes due to lower exports.
Achha.
Okay. So these are the reasons why the volatility has been rising.
About the corrections that have come, so how many corrections have come in the last few years? If you
see, we have identified 5 corrections basically. So if you look at the first correction, most of these corrections are triggered by external factors.
Okay.
So if you look at the first correction, it is triggered by the Chinese markets sell down in the year of in January 2015, and it continued till February 2016.
Okay.
Sensex lost around 22.7% during this period. Okay. The second correction was triggered by US-China trade wars. It was between August 2018 and October 2018, and the markets have actually tanked 14.3%.
That was the time when Donald Trump kind of put tariffs on China.
That time. The third correction basically was during 2009, between June 2019 and September 2019, when the India government has returned to power. And also the markets were reacting that time because the government was actually preparing or presenting the first full budget.
Okay.
So that was the thing that has increased the volatility. Markets have actually lost around 10.4% during that.
That was the second time NDA government came to power.
Yes. Right.
Okay. And
the fourth correction was recently during the onset of COVID-19 pandemic. Markets have actually corrected over 38% between January 2020 and March 2020. And the fifth correction is the latest correction basically between October 2021 when the markets hit the peak basically, and between June 2022.
Stocks that have kind of resisted all these market corrections. So let me first tell you, while you were trying to find out those stocks, what kind of methodology did you use in finding out that stock?
Okay. See, the thing is that because of the risks that I've already mentioned, we wanted to look at some stocks that have performed better during the market corrections or during bear market.
Okay.
So we wanted to look at stocks that have actually lost less than their benchmark. The benchmark here defined as BSE Sensex. Okay. Or those that have gained during those market correction period.
Okay.
So those 5 corrections that we have identified, we tried to look at the performance of stocks and the performance of the benchmark BSE Sensex.
Okay.
So we only consider stocks that have market cap greater than 1,000 crores to eliminate basically small cap stocks.
So you're saying a market cap of 1,000 crore. So what was the timeline of that you took?
For identifying the correction, we used the data for the last 10 years. We look at the BSE closing prices from June 2012 to June 2022. So on that basis, we look at the market peaks and troughs, and a minimum fall of 10% from the peak to trough, which we identified as a correction. Okay. The other thing was that the difference between the peak and trough has to be a minimum of 8 weeks or 2 months.
Okay.
So on that basis, we identified the 5 corrections that we have already discussed.
How did you find out the fundamental soundness of those stocks?
Okay, so once we have determined the 5 corrections, now we looked at stocks that have actually lost less than the benchmark or have gained more than that.
Okay.
So we got some shortlisted stocks. Now to make sure that these stocks are fundamentally sound, we looked at some fundamental metrics. We used 10 years annual data from FY13 to FY22, and we looked at the 3 ratios basically. One is the dividend payout ratio, other the year-on-year EPS growth, and the return on equity. Okay. All this data is extracted from Bloomberg.
Okay. So you talked about year-on-year EPS growth. If you could tell our viewers.
EPS is basically the earning per share, how much the company is actually earning on a per share basis. So that way we looked at last 10 years data for the EPS growth.
Okay.
Companies whose last 10-year average of all these 3 metrics is greater than 15%. Okay. So the other thing is that we only look at those companies that have reported positive EPS in all of the last 10 years. So that way we make sure that the company is fundamentally sound.
Okay.
So on that basis, we identified some 5 stocks.
So I think you have identified 5 stocks
Yeah.
and their prospects going forward. So the first one I think is the TCS. Why did you choose this stock?
See, TCS is actually it has cleared all the filters that we have applied. So it's actually it has shown good resistance during the market corrections and also fared better on the fundamental metrics that we have used. So if you look at the future prospects of this company has reported an inline growth during the first quarter 2022-23, and the growth is driven by an uptick in different verticals. Now, those verticals are consumer packaged goods, retail segments, communication media, and BFSI. Okay, so apart from that, the company has also generated good free cash inflows, and that is a key positive for the company in the current quarter. In the near to medium term, the demand environment is likely to remain strong.
Okay.
So as a result, the company's deal bookings will be robust.
Okay.
So these are the and also the company is likely to improve its operating margin in the next 3 quarters.
So let's get to the second one. What's the second stock that you think has a very good growth prospect?
The second one is the Power Grid Corporation. Power Grid Corporation is a steady performer due to its recent asset additions in the past few years. Also, the company is exploring smart meter business where expecting a good IRR, that's the internal rate of return.
Okay.
The other thing is that it is also emerging as a key player in the battery energy storage system.
Okay. The
So,
EV energy.
BESS, battery energy storage system. Also, it has the presence across value chain and it aims to improve government transmission and distribution system. So, it is also pouring into the solar power generation. So, in terms of renewables, also the company is it's doing better. And capex of the company is very high. And according to a JP Morgan report, it says that the capex will be the near-term growth driver for the company.
Okay.
So, these are some of the reasons why we look at the Power Grid Corporation.
Okay. Now let's talk about I think it's a chemical company, SRF. So how do you see its growth prospects?
So SRF is a specialty chemicals company, and as you like the specialty chemicals, the segment is poised to grow basically because of the government policies like tax incentives, PLI schemes, and export opportunities are there. Then there will be product innovations are there. So these are some of the factors that are expected to benefit specialty chemical segment. Now coming to the company itself, it has its fluorochemicals business segment basically. It's likely to benefit because of the strong refrigerant gas price environment.
Okay.
So the packaging segment will be supported by the strong demand for packaging films.
So I think the fourth stock is also an specialized chemical company. What's that?
Yeah, the fourth stock is Naveen Fluorine International. It's also a specialty chemicals company. Now the company is likely to benefit from a healthy order book that provides strong growth visibility going forward. Okay. The other thing is that there is a robust growth prospects in the CRAM segment, and also the company has a strong pricing power in the inorganic fluoride segment.
I think after IT, power, and two specialized chemical companies, the fifth one is a beverage company.
Yeah, the fifth one is CCL Products.
Okay.
So the company will be a beneficiary of high coffee prices.
Okay.
And it's expanding its capacity in Vietnam, so that will also be beneficial for the company going forward. Also, the company has aggressive distribution plans in the domestic segment, and the economies of scale and strong customer relationship with other strongholds of the company.
Okay. So there you go. These are the 5 stocks which are most likely to weather the upcoming storm according to the research done by ET Well.